Let's start with the Indian rupee, and that has continued from strength to strength. We have seen the upward movement continue today as well. On your screens, 1/10% of a gain coming in for the currency, and this is after 0.5% of a move in the previous week as well. You have seen strength continue because of the strength and also equity markets, and the decline in dollar index also has been there. Let's get on board then Vijay Bambani, who's author and CEO at BSPL India. Vijay, what's your sense? Because we have been talking about strength in the currency. I remember you have talked about a level of 61.80, 61.65 as well. Do you see them coming this week?
Quite likely, Manisha, because what you are seeing, what you are seeing is weakness in the overseas currencies rather than too much of a strength in the Indian unit. And I feel the 61.65 level still needs watching. I would feel that this is a critical level to watch out for, but the rupee's scope for appreciation does not by any means end over there. In case the strength was to sustain itself, the level I have been talking about is 60.60, which is a good level to start buying the US dollar from. So if you're a momentum-based trader, you need to look out for signs of reversals from 61.65. But if you're actually looking out for a plumb buy position on the USD, I think the appreciation potential still exists up to 60.60.
Vijay, also, how are you looking at the dollar index now? Because there has been a decline. When we started this year, most people said that the dollar and equities perhaps will gain, and you could see perhaps the other asset classes declining a bit. That really doesn't seem to be the case, and the dollar still has to find its footing.
Well, Manisha, the volatility in the currency is still a cause for concern, and I think what could put a spanner in the works of most of these calculations is the way currencies behave. Of course, the economic data points by themselves are by no means indicating to a very clear-cut recovery process here also. But what worries me is something that we discussed on air on Friday, was that the Eurozone is contemplating legislation to access funds of 500 million account holders directly from their bank accounts to fund their long-term debt. That is also impacting currencies worldwide. And the US is likely to be weighed down by the fact that the recovery in Europe is a far slower affair than it was expected, and therefore you're seeing the USD index weighing down on its own weight and dragged by the gravitational forces. I would keep a very strict eye on 79.85 odd levels on the USD index in the coming few trading sessions.
One quick word on the other emerging currencies as well, Vijay, and we have seen some sell-off abate into that one as well. Do you think that is something that would really bring about the risk appetite back into the markets?
Manisha, risk appetite I don't see returning back in a hurry, because what I am seeing at this point in time is a technical pullback rally. Now, technical pullback rallies can also be fairly vicious, and they can be delusional to the extent that the non-savvy trader mistakes that for a trend reversal and starts accumulating leverage long positions only to regret at a later date. So I feel risk appetite will take its own sweet time in coming probably in the second half of calendar 2014, if all goes well. At this point in time, I still think it's a blip on the radar and it's just a technical pullback.
Let's also get on board then Manoj Rane, who's MD, Head Fixed Income and Treasury, India, BNP Paribas, and he joins us to discuss the currency market as well. Manoj, hi, welcome. First of all, what's your sense on the vote on account that was presented today, and what kind of an impact does that really give you on the kind of numbers that the FM has come out with?
See, I think a couple of things. One is market did indeed believe that the fiscal deficit target would be complied with, and that next year's fiscal deficit target would be a bit lower than this year's. Having said that, I think there is a little bit of a lack of credibility, because there is only so much that a departing government can do in a vote on account. So I think there is a little bit of skepticism about whether the 4.1% projected for next year will indeed be achievable or not. And of course also a little bit of skepticism on the way this current year's 4.6% against a 4.8% target is going to be achieved. Though people are more confident about it, they do feel that it will be achieved again by a little bit of smokes and mirrors, where you postpone expenses out to next year and so on. And that's the reason why, Manisha, you haven't really seen interest rates react to that extent. They came off a bit initially, but then they were up thereafter. Even the currency, which in anticipation had improved a bit, got bought off. The dollar got bought off against the INR a little later on. Having said that, I think this is, relatively stable compared to the way international markets have been moving over the last couple of weeks. India, you would have noted, is possibly among the better behaved currency markets over the last 2-3 weeks, and the trend continues. Even 62, which was not that easy to break, has been broken today, and then again, of course, the currency moved up a bit over that. But it's a sign that, there is increasingly more conviction that the currency might be stable. So all in all, I think the vote in account remained what possibly it had started out to be, and I dare say, a bit of a non-event.